afternoon to all of you. We apologize for the 5 minutes of delay on this call. So without much ado, I will just introduce the team. Today we have Alok Patel, we have Amit Bhai, and we have Vivek from Team Arman to take us through how the last quarter was and how these events of the last 2 months are shaping up and the impact on Arman. So yeah, over to you, Alok.
Thanks a lot, Digant. Thank you, everyone. Thanks. Good afternoon to all of you. Hopefully, I'm audible to everybody on call. If not, moderator, please interrupt me. Thank you for joining us for the second quarter investor call for fiscal 2019. I'm joined on the call by Amit Bhai and Vivek, who are part of Accounts and Finance. Firstly, we have issued the press release for the past quarter, and hopefully everyone's had a chance to review it. If not, it's available on the company website and on the stock exchanges. As you have seen from the results, we've had a good quarter by any measure. Consolidated PAT for the quarter was 5.41 crores compared to 80 lakhs the same quarter the previous year. This is a 576% increase. The same quarter the previous year is, of course, not very comparable as we were still reeling under the effects of demonetization. Comparing Q1 FY19 versus Q2 FY19 shows a PAT growth of 17%, which is from 4.61 crores to 5.41 crores. Consolidated PAT for the half year was equally encouraging. PAT crossed 10 crores compared to 1.74 crores the same period the previous year. This is a 476% growth. Just for comparison purposes, the consolidated PAT for the entire previous fiscal year was 7.3 crores. So in 6 months alone, we have already surpassed the previous year's profit by 37%. The total AUM of the company has grown from 296 crores as on September 2017 to 519 crores on September 2018. This represents a solid 75% increase in AUM over 1 year. The number of active customers increased from 1.65 lakhs to 3.06 lakhs during the same period, which is an 85% increase. So most of our portfolio growth came from adding new clients. Despite the ongoing liquidity crisis in the market, which we will discuss in detail a little later, the AUM increased 17% from the last quarter, which is Q1 FY19. Disbursements are pretty solid as well, and so far we are on target with our projections for the year. Disbursements for the quarter almost touched 200 crore, which is the highest disbursement in a quarter till date. For 6 months ended, we achieved a consolidated disbursement of 355 crores. In the microfinance segment, we are experiencing a good growth thanks to our branch expansion activities we have undertaken in the past 12 months. In October, we opened our first 3 branches in Rajasthan. We will be expanding cautiously into this new state in the coming 12 months. The AUM of this segment has reached 358 crores. The new MSME division, which caters to rural business owners for loans up to 1.5 lakhs, is growing wonderfully. Disbursements are increasing as per plan, and the asset quality so far is great, with only 30 overdue accounts out of 21,000 customers. That's 30 overdue accounts out of 21,000 customers. The AUM of this portfolio has almost touched 65 crores at the end of September. One point to note is that since this is a new division, we are deliberately growing slow based on our conservative DNA. Once we get a mental comfort with this business, we are committed to expand this division to a meaningful percentage of the consolidated portfolio. The two-wheeler division also continues to be strong and resilient as always. The past busy season for two-wheeler sales was negatively affected in the market due to a Supreme Court order which makes it mandatory to issue a 5-year third-party insurance cover for new two-wheelers. This increases the initial upfront cost of the vehicle to the consumer by anywhere from 3,000 to 8,000 rupees. Despite this negative headwind, AUM for the division increased to over 95 crores. As we have mentioned in the past quarter, we are proud again to note that 100% of our disbursements in all three divisions have become cashless. This has significantly reduced our cash risk and increased our controls. It has also helped us lowering our operating cost. While the transition has marginally impacted disbursements and AUM growth, and there were of course teething issues with operations, the minor pain we feel is well worth the effort for the long-term benefits of cashless disbursements. We were one of the first MFIs in India that have managed to shift to 100% cashless disbursement, and one of the few handfuls in the market that have managed going 100% till date. At the end of the quarter, we have a presence in 5 states and operate through 159 branches. Since the last quarter, we have opened 15 new branches, of which 2 were in MSME and the balance were in the MFI business. We have put a hold on opening any further branches in Q3 due to the ongoing liquidity issues in the NBFC market. Now, speaking of the liquidity issue, I think it's time to address the elephant in the room, which is vis-a-vis how has the ongoing liquidity problems in the market affected Arman. I'm sure the people listening on this call are more in tune with the current market conditions and how and why the crisis has emerged than I am. So I don't want to waste too much time macroeconomic causes and effects. However, first and foremost, let me assure you that Arman and Namra faces no insolvency risk. We have a positive ALM because we use relatively long-term debt to fund short-term loans. The loan tenure to our customers range from 12 to 24 months, while our borrowing tenures ranges from 24 to 42 months. Second, this is a crisis of confidence. Most of the smaller and mid-sized NBFCs do not access the CP market or other money market instruments. NBFCs come in all sizes and flavors, and you cannot categorize all NBFCs into one broad category. Yes, there are a few NBFCs which have long-term assets financed with short-term debt. In that case, there is a risk of default even if the fundamentals are strong within the company. So anyway, starting with some good news, I'm happy to note that so far our planned disbursements have not been impacted. We had sufficient cash flows in the pipeline when the crisis began, and in most cases we have been able to pull undrawn sanctions. We also had another $4 million NCD transaction in Arman in the past quarter. We maintain excellent relationships with our banks and financial institutions, and by our estimates, we have enough liquidity in the pipeline to ensure planned disbursements until the end of Q3. Going into Q4, however, things start to get a little bit more blurry. I don't anticipate any issues. However, in the worst case scenario, if the liquidity situation gets worse, we would have to reduce our disbursement targets. The cost of borrowing would also increase in the short term. I would like to stress again that even in the worst case scenario, we have a very strong board-reviewed ALM, and there is absolutely insolvency risk due to market liquidity conditions. I do not anticipate liquidity conditions to get worse. In fact, I see the conditions slowly improving. So on that positive note, as always, ladies and gentlemen, we are thankful to the whole Arman team for their hard work and thankful for all of you for your support and encouragement. Thank you once again, and I would like to open the call for questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question at this time, they may please press star and 1. The first question is from the line of Amit Mantri from 2.2 Capital. Please go ahead.
Yes. First of all, congratulations on very good numbers. There will be a lot of growth on all segments of Arman's business, which is quite positive. And the asset quality also seems to be holding up very well. So my question is again, since you have been growing so strong and assuming that with the liquidity problems getting resolved in the market, you will continue to disperse as per your original plans, then what happens 6 to 9 months later when probably you'll again be required to raise additional equity for future growth. So till what runway do we have on our current plans where we don't require to raise new equity?
I think, right, first of all, thank you for your nice comment. I think it's starting off with a question from the very beginning. Yes, you're right. I don't think that we will require equity so quickly, as in not in 6 or 9 months from today. We have sufficient capital as per our estimates to take us to at least about 900 to, let's say, optimistically, 1,000 crores of AUM. And that's probably stretching it a little bit. So until then, we don't have plans to raise equity. But after that, of course, we will have to, So in about 4 to 5 quarters, we'll have to consider raising more equity. And as far as this round goes or the next round goes, I want to make sure that it counts. So I don't think that we plan to continue and keep raising equity because, once the portfolio reaches a certain size, I'm sure the growth will probably slow down to a certain extent. But I don't have the exact answer for you as of today, unfortunately. But yes, the short answer is definitely there has to be another round. But when and what quantum that will be, I think we are still at a discussion stage.
Sure. So in your microfinance business, you have a fair bit of competition from the small finance banks, which have in their commentary said that since they don't have any liquidity issues, and the smaller MFIs are facing liquidity challenges, which should mean that there will be market share gains by the small finance banks and the banks themselves, or in comparison to smaller MFIs. So what does this mean for the future of both the MFIs and Arman as well?
See, first of all, I'm not completely sure that all SFBs are not facing liquidity issues. Some of them are facing liquidity issues, and as far as my market knowledge is concerned, many of them have slowed down disbursements. So while there are some of them that are taking advantage of the situation who are well capitalized or have sufficient liquidity available, there are others who are slowing down or pulling back as well. So I do not foresee too much of an issue from the SFB. That being said, competition is very real in the market, and certainly we try to combat that by being at the right place at the right time, providing better service and all of the other stuff which I'm sure you are used to hearing time and time again. The other part to note is that India is a very large country, and the population that we serve is again enormous. So just to kind of give you a little background, that when I started in microfinance, the expectation was that all the money lenders or the informal segment will go out of business in the question of 2 or 3 years. If you go to the ground level, that is not the case. They are still doing business along with the Shrofis and the money lenders and everybody. So there is enough room for everybody to operate because the market is broad enough.
Oh. Next question was on the MSME business. The NPAs there just seem, too good to be true. That's a great outcome. And what do you make of it? Is this also like a segment like microfinance where you have 1 year where the NPAs will significantly shoot up and other years will be very low? Is the nature of business similar to the microfinance segment?
It's similar. It's basically microfinance plus or microfinance 2.0. Just right now, there is not a lot of we face, so we are sort of cherry picking our customers. We have a pretty large rejection rate, and you are right. The numbers seem quite unbelievable, but I assure you they are true.
Of course.
And it's it's a little hard for me to believe as well, to be honest with you, because I was expecting somewhere around 1 or 2% NPA by now. But I don't think I really want to jinx it by saying let the good days continue for as long as possible. But yes, it's not possible for these numbers to remain sustainable for the long term once our balance sheet size grows, once we expand geographically. I expect that they'll settle at around 1 or 2%. Earlier when I started it, I was expecting around 3%, but that seemed a little bit too pessimistic of a approach at then. So I'm probably revising myself mentally to say that about 2% in the long run. But right now we are just enjoying the environment as much as we can.
And on the two-wheeler business growth, if you look at the disbursements, they have not increased on a QOQ or a YOY basis. However, your loan book growth has increased. So it suggests that repayments have been much lower than the historical trend. So what explains this?
Repayments are there. There is inflation which is causing the cost of the product. Cost of the vehicle has increased by about 10-15%. Tenures have sort of increased a little bit as well to cover the cost of vehicles. So those kinds of factors are there. But two-wheeler, the dealers had a pretty bad season this year. And comparatively, to be very honest with you, we did not manage meeting our targets as well because of the new Supreme Court order that came that said that, the two-wheeler vehicles, whenever you buy a new one, you have to insure it for 5 years straight. Earlier it was the full insurance, then I think they cut it down to third party only, but that still increases the cost by 3,000 to 8,000 rupees. And the segment of customers we deal with don't have that extra money. So it was not a very good season all around. And by season, I mean the time from Navratri to Diwali. So that is basically the busy season, or around the late second quarter to early third quarter is the busiest time for two-wheeler sales. So that was not as per expectation, unfortunately. And that is the case with all two-wheeler manufacturers, financiers, whatever you want to call it. So that is the case with two-wheeler. But otherwise, it's a resilient, for us, it's a very resilient division. Macroeconomic things don't affect it too much in the long run, and it's stable, and it's growing at a stable rate year on year.
Okay. Thank you for now. I'll come back in the queue for further questions.
Sure, thanks.
Thank you. Any participants who'd like to ask a question at this time, they may please press star and 1. The next question from the line of Digant Arya from Antec. Please go ahead.
I also had 2 questions. So much has happened here in Bombay. Thankfully you guys are, a little away from Bombay, so I'm sure 2 months would have been a little better. But Alok, the question is mainly, in terms of, state level trends. We again began to hear that Orissa was such a nice state 2 years ago, but a lot of overcrowding has somewhat happened in Orissa. So in that way, if you can just throw a little bit of state-wise, wherever we are present, like, Gujarat, Madhya Pradesh, Uttar Pradesh, our 3 key states, how are we seeing the surrounding ecosystem in those areas?
Sure, Digant. So first of all, you are right. So let me just give you a little bit of background of when the problems arise in microfinance, how they come. So when people typically say 1% loss or 1% NP or whatever, those are usually caused by certain hot pockets in one district or another. If it's a bad year, it could be one state or another. I think Kerala had a natural disaster, and yes, you are hearing about some heating up which is happening in Orissa. I'm hearing about some heating that is also happening in the northeast or eastern side of India as well. So these things do happen from time to time. In our case also, like if you look at what happens is in microfinance, when the problems come in a certain area, they come with a battalion, And when there is good weather in a certain area, then you have no problems. I still have plenty of branches, over half of my branches, which are completely have zero overdue. They have absolutely not even 1 rupee of overdue. And there are certain branches which might have, 10-15% also. So by average, it will come to 1%. The fact is that after doing this for so many years, you can handle these kinds of situations whenever they do come up. Why demonetization was such a unique event is because it happened countrywide. So you weren't fighting one firefight, but you were fighting, 150 places, or if you have 150 branches. So those kinds of events are quite difficult to manage. But as far as the localized fires or wildfires that erupt from now and occasionally, I think all MFIs are well suited to deal with those. As far as Arman's portfolio, or especially the MFI book portfolio is concerned, so earlier on, I think about a year and a half ago, maybe a little more than that, almost 80% of our portfolio was in Gujarat, about 2 years ago. Now we have reduced it to almost 33%, so only 1/3 of the portfolio is in Gujarat. And, Madhya Pradesh, we have about 25%, Maharashtra about 20%, another 22-23% in UP, and, a negligible 1% is in Uttarakhand. We are opening up Rajasthan as well. So as we keep diversifying geographically, I think these state-level issues or district-level issues that come up will have less and less impact on the balance sheet. Commenting on the states we are in, I don't foresee any large issue, or I am not expecting any large issue in any of the states. UP people are always concerned about, but, I don't foresee any political things coming up besides maybe elections in the near future. MP has state elections this month, so we are going slow on those disbursements, but we always do that, so it's nothing new for us. Whenever there are state elections or local elections going on, we always cut down on our disbursement targets. And Maharashtra and Gujarat are behaving great right now. Another thing to note is that we try to typically not go into areas which are have a large concentration of MFIs. Now, that doesn't always work out, because if you are an early mover into that area, nothing prevents the other people from coming in. But by far and large, at least in the newer states like UP and Maharashtra, we have not entered into areas where there are significantly large portion of MFIs, or the concentration risk is very, very high. So that hopefully that helps, Digant.
Right, perfect. That's helpful, Alok. Second is, in terms of operating costs, we have opened a lot of branches. I think we were at maybe 70 branches around Demon, and, we are at 135 now. So it's practically like we have doubled the number of branches, and similarly, our operating expenses have also doubled from, say, 5 crore a quarter to almost 10-11 crores of run rate now. Do you think that this correlation will still continue, or we can have some operating leverage coming in the next 8 to 12 months?
No, we already do to a certain extent. I think, so if you look at our employee costs, for example, that has increased substantially, even though the AUM has, So, if you are into expansion mode, controlling those operating costs are difficult. If you slow down, you can definitely get, 50 basis points or even up to 1% of savings in the OPEX. And now that we are a sufficiently larger size, I think we have already started getting some of the benefits of the OPEX. From about 500 to 1,000 crores, I'm not 100% sure, but I've heard that there are some levels you gain some efficiencies in some areas, and then there are diseconomies of scale in other areas, so it kind of balances out. But of course, our, cost, as they say, is a continuous process, and we are well aware of that. But I think that what you are predicting in 6 or 12 months is already happening as we speak.
Right. All right, Alok, I think, good luck, and I think I'll hand over to the other participants for the Q&A. Thanks.
Sure, no problem. Thanks.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. We have the follow-up question from the line of Amit Mantri from 2.2 Capital. Please go ahead.
Yeah, again on just the funding requirement for us. So we have a fair bit of borrowing that we do from non-bank sources. And
correct.
So now the incremental, the sanctions that you have, those are largely from the banks, I assume, and the non-banking sources that you have they dried up over the last couple of months?
So, Amit, to be completely honest with you, they had dried up until a couple of months ago, until the liquidity crisis hit. And now we are at a situation that most of our incremental borrowing, at least in the past month or month and a half, are coming in from financial institutions. Sorry?
No, that's interesting actually.
Yeah, because, see, as I said, sometimes it's very frustrating, as I was saying during my talk also, that, when it comes to banks, and when there are issues surrounding the NBFC sector, they tend to paint the entire sector into the same category or into the same bucket, wherein if these large companies are in problem, let's shut down the entire sector. So we do have certain sanctions from banks which are not being released, and new sanctions are, of course, proposals are outstanding. But I think this is a problem that's being faced by many, or if not all, many of the MFIs, especially the MFIs of our size or maybe a little bit smaller than ours or slightly larger than ours, is that any sign of anything going wrong, and the first people to kind of cut back on the liquidity are the banks, especially the PSU banks, if not the private banks. Financial institutions, on the other hand, they do come at a little bit of a higher cost, but you are much, the comfort level is much higher as far as reliability. So with banks, if you have a proposal outstanding, it can take, 2 weeks, it can take 2 months, it can take 2 years. That certainty is just not available. So I don't think that, at least for a while, at least our reliability on financial institutions will completely go away, just because of that reliability factor. But we had made a very strong headway on reducing the financial institutions on our overall debt portfolio to a large extent, where I think almost 65% or so was
at some point of time.
Right, exactly. So, but now we are at a sort of a reverse situation. And the bad part about this liquidity crisis is that it's become a seller's market rather than earlier it was a buyer's market. We had plenty of funds available from all sources, and we could demand the subsidized rates or rebates or whatever you want to call it. Now we are at a situation where it's a seller's market. So we do expect interest rates or our weighted average cost of borrowing to increase in this quarter, and hopefully not next, but maybe the next quarter as well.
Okay, got it. So just a couple of data points I wanted to understand. So as of demonetization, your MFI book was around 160 crores, 155 to 160 crores. And by now you've pretty much realized, all the credit costs associated with the demonetization book. So what has been the experience in terms of eventual credit costs of the demonetization book?
So the demon, as you rightfully said, it's kind of done and dusted. There is still a very small portfolio that we are still collecting money from, but I think most of it, Vivek, if I'm not mistaken, has been provided for.
All has been provided for. We continue to collect on the written off portfolio as well. And there's a small portion where we continue to see recoveries, and they're at best classified under NPS, but then we're seeing good recoveries there. As the tail just gets over.
So there are certain branches where we have put in a special recovery team, and we are continuing with the recovery team as long as their the operating cost of having that recovery team is less than what they are able to collect from the field. We are continuing to have that. So we are still, just to let you know, we are still collecting about 40-50K a day of demonetized assets, So it's not a very, very large number, I know, but it's certainly nothing that you can just ignore out of and get it out. Our experience post-demon, I think the days of the 2% loan loss or the 0.2% NPA or the 0.2% loan losses are sort of behind the MFIs. I think now that we have reached the sufficient, the industry has reached a sufficient size and the company has reached a sufficient size, going forward, on average, you will have to expect about a 1% loan loss going forward. And that is the truth, I don't want to sugarcoat it or anything like that. I think any person who tells you otherwise is doing a disservice to himself and the industry as a whole.
Sure.
So that is my opinion.
So the write-offs as of now in terms of absolute numbers on the demonetization book would be around 3.5 crores or more than that?
No. We have written off about 6.5 odd crores. Last year and this year.
Okay, got it.
I'm sorry. I'm doing much about 4.5, I think.
Last year was 4.5 crores.
Okay. Yeah, sorry. That was related to demon, yes.
4.5 crores, is it?
Yes, sorry, I misspoke there. 6.5 was I think the entire, all books and everything combined for the last year and a half. So,
got it. And what is in terms of, in Gujarat, you are fairly large. So in terms of just in the market share in Gujarat, would you be the largest or second largest player in that market?
As far as our portfolio and disbursements are concerned, we would be at least in the top 2 or 3. So I don't have the hard data about Gujarat because that's not, I do have data on Gujarat players, but I don't have segmented data, and most of the players here are not listed companies, so unfortunately I don't have data for them. We would be at least in the top 3, if not the top 2.
No. Okay.
Alok, this is Savi here. Just on the fundraising bit, we are listening to some of the concalls by the small finance bank. They were talking about, carving out a large part of their book for on-lending to smaller MFIs like yours. So, are those conversations happening? Because they are probably one set of lenders who will understand this business and will be much more proactive in giving loans to you than maybe some of these PSUs and private banks.
No, we are already in touch with, I think, most SFBs, if not all. And we do have exposures with actually 3 of them. One is FinCare, and I think we are in talks with Bandhan as well.
Yeah. I think in terms of SFBs, we are in talks with everybody.
Right.
And,
so earlier we were at a situation where some of them were interested, but the rates that they were offering were high, where there were enough alternatives available that we didn't pursue it seriously. But of course now we are at a different boat. Not to give you Savi, not to kind of discourage or anything here, but we kind of became a little bit, not lazy, but the ample funds were available for the last 12 months, and now all of a sudden it's not available, and it's not like nothing is available. It's just that we have to work a little harder and pay a little more for it. That's about it. But to answer your question, yes, we have been talking to I think most of the SFBs, and if they are willing to take an exposure, we have absolutely no problem with that.
Great. Okay, just one request. Now that, you have 3 segments which have become fairly sizable, with MSME also now becoming around 12% of the loan book. If possible, you can share segment-wise PAT and ROE data in the future. Not now, but going forward.
We can. The only issue is that there are a lot of costs that are shared, especially amongst the two-wheeler and the MSME, because it's under one segment. So we can certainly share an estimate, but let me look into that. So the incomes and stuff we can definitely divide up, and I think we do provide that in the press release. EOMs and everything. The bottom line is a little bit tricky to get into because of the shared expenses. But we can divide that up with some meaningful way like portfolio and things like that.
Sure.
Definitely we can consider. Let me just have a word with the legal people and the company secretary and stuff. I'm not sure if I can or not, but if we can, we can release it. At least the estimate.
Sure. Thank you very much, Alok, and good luck to the entire team.
Thank you so much. Appreciate it.
Thank you. Ladies and gentlemen, that would be the last question. I would like to hand the conference over to Mr. Digantarya for closing comments. Thank you, and over to you, sir.
Hi, Alok, just before we conclude, one question from my side is that, what have been the lending rates, between, you and maybe generally the market, how has it gone up in the last 6-12 months on the microfinance?
The market rates for giving to our customers or our borrowing rates from the...
No, not your borrowing
rates,
lending to your customers.
So our borrowing rates have gone down for at least like 125 basis points in the last 12 months. We have, in the two-wheeler segment, I think in the last 12 months it has gone down about 1.5%. In the microfinance, about 125 basis points. In the MSME, it's stable. I haven't made any sudden moves in that, and I'm approaching that segment cautiously to begin with, so I don't think it's a need, but in the future we can consider a rate revision to reduce it. So overall the trend has been reducing, but now, Digant, with the overall market scenario and with cost of borrowing increasing, I might have to increase that in the next quarter. And unfortunately, a lot of the debt that we have is floating rates. So, my rate to the customers is a fixed rate. So, I cannot revise the rate of my existing customers. So, I have to, even a small increase by some of my lenders in the floating rates, I would have to somehow pass it on to my, new or incremental customers. So I increase in that.
And how far away are we from that RBI cap of 2.75 times the PLR?
So right now we are about 30. I think we are about 40 basis points away, 40 or 50 basis points away from the RBI 2.75. I think it's the average base rate of the top 5 banks. Multiplied by 2.75x. But that ceiling, I think, will also increase in the coming quarters because the bank base rates are expected to increase or are increasing.
Correct. So at least there is a 40 bips room currently there, and after that, once the bank base rates are revised, there will be more room to take lending rates hike if necessary.
Correct. Yes, that's correct, Nika.
Perfect.
But on the borrowing side also, we just got a credit rating upgrade and a grading upgrade both. So I think we are we just got upgraded to a BBB+. And so hopefully in a short while we'll be at an A-. And from the grading side, we are at an MFI 2+, which is
one notch below the perfect one.
Yeah, so that is one notch below the highest you can get. So hopefully, if it wasn't for this liquidity issue, we could have further reduced our rates because we could have gotten the rates adjusted and all of that stuff as well. But what can you do here? I mean, these conditions are something that you just have to deal with occasionally.
Right. No, great. I think on that good note, I think when we started this con call till today, there have been 9 con calls and 2 upgrades. So I think on this good note, we can, probably call it a day. There are no further questions. So.
Yeah.
Right. Okay. Thanks, Alok. Thanks to the management from Arman, and thank you all the participants for coming on this call. So hope to see you guys next quarter.
Thank you. Thanks, guys.
Thank you. Thanks, everyone.
Thank you very much.